योजना से संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
Hello and a warm welcome to South Central with me, Jude Sanath. You're watching India's first and only business news bulletin to get you the lowdown on everything making news across the 5 southern states, from markets, businesses, boardrooms, policy corridors, and politics. It's another action-packed bulletin today with exclusive conversations and a whole lot more. But first, let's take a look at the headlines we're tracking at this hour. Tamil Nadu gives wings to its aerospace and defense manufacturing sector as the state's Industrial Development Corporation signs 4 MOUs for proposed investments totaling 1,600 crore rupees and 1,900 jobs. On the back of its 175 crore rupee funding, Chennai-based fintech startup AssetPlus looks to double its mutual fund distribution as it hopes to break even in 15 months. That's what the company's CEO says in a South Central exclusive. The Kerala High Court issues a notice to the producers of the Kerala Story 2 over a petition that the film violates tenets of the Cinematograph Act as the movie continues to stoke controversy on both sides of the political spectrum. And as Bengaluru-based semiconductor startup SenSemi Technologies closes its seed round, the company's CEO Vijay Muktamat joins us on the show today to talk us through its go-to-market strategy and revenue generation timelines. On to our top story first. Tamil Nadu's Industries Department may have already presented its industry report card for the last 5 years, but the investments seem to keep coming at a steady pace. The state has just signed 4 MOUs totaling 1,600 crore rupees to bolster its aerospace and defense ecosystem. The move is aimed at deepening high-precision manufacturing, specialized training, and defense production in the state. The deals span different segments. PMI Engineering Exports will put in around 500 crore rupees to set up a precision aerospace manufacturing unit. Simvayu will invest 600 crore rupees in a state-of-the-art aviation training and simulation center in Chennai. Tycon Global Systems plans a 500 crore rupee ammunition manufacturing facility in Thoothukudi, and an IIT Madras startup that's Inbound Aerospace will launch an advanced aerospace manufacturing unit focusing on modern systems and components. Together, these projects are expected to generate nearly 1,900 jobs and expand the state's capabilities across key aviation and defense value chains. Remember, Tamil Nadu has announced investment deals worth nearly 6,000 crore rupees across semiconductor and aerospace players as the state hopes to prop up Chennai and surrounding industrial corridors, manufacturing and engineering hubs. Staying with Chennai then, city-based fintech startup AssetPlus recently announced a 175 crore rupee funding round led by Nexus Venture Partners and with participation from 8 Road Ventures and Rainmatter by Zerodha. In an exclusive chat with South Central, the company's co-founder and CEO Vishranth Suresh told me that the startup is actively looking to more than double its mutual fund distribution network as well as turn profitable over a 15 to 18 month timeline. Here's a slice of that conversation.
Just to set a context, we are predominantly in the assisted mode of investing. So we strongly believe that a large part of the Indian population can actually create wealth by investing via professional experts rather than the do-it-yourself mode, which has been quite popular over the past 4 or 5 years or so. Right. So we are of the second school of thought, which is quite niche, but it's growing quite a bit because people understand the importance of distributors and advisors. So we currently have a network of 19,000 mutual fund distributors who use AssetPlus platform to service their customers. So in this context, context, the fundraise predominantly is, as you rightly mentioned, tech is the number one priority for us because the distributor network on AssetPlus is growing quite a bit. We are hoping to be able to target a 40 to 50,000 distributor network in the next 3-4 years. So to enable that sort of a scale for distributors and for their end customers to whom we provide the client applications as well. So that requires the tech to be extremely robust and scalable. So we'll be investing quite a bit on that. This apart, so our customer target segment has largely been the retail customer. Right. So you would say someone from a 5 lakh portfolio all the way up to 2 to 3 crores. I think almost 95% of the customers fit this portfolio range. So we are not looking at expanding the customer to the next set. So we are not looking to target the high net worth individuals and so forth, but rather how are we better equipped to provide better solutions for this group of customers. So as on today, we offer mutual funds, and we have recently expanded into health insurance and term insurance as well to cover the financial planning bouquet. Now we are exploring, can we enable global investing for this segment, because that becomes a pretty critical part of their asset allocation. We are looking at, can we start offering PMS products for the customers who are crossing 1 lakh, 1 crore, 2 crore in portfolio size and so. Right. So expanding a product bouquet is number 2. And equally important for us is expanding the distributor network itself. Absolutely. Right? So because India does not have that large a distributor network yet for mutual funds, we just for a 5.5 to 6 crores population that's investing in mutual funds, we hardly have 175,000 unique mutual fund distributors across the country. So we feel we'll have to play a critical role in expanding this pie, and thereby a certain part of that pie joining AssetPlus to digitize their business and grow as well. So these are the top 3 areas.
So looking to increase that mutual fund distributor network to about 40,000 to 50,000 will essentially mean more than doubling of that 19,000 number as it stands today. But since, by its very existence itself, AssetPlus is all about enabling mutual fund distributors or mutual fund advisors to actually go about making solid advice for, end users or customers. The question really is the focus going to be more on expanding this network of distributors or expanding the overall customer base? Even as we speak, you already told me about expanding that 19,000 count to about 40 to 50,000 in terms of mutual fund distributors. What becomes of the customer numbers? 150,000 customers are where the company stands as of now. Where do you see growth on this front taking place?
So how we look at this piece, Jude, so our primary focus is being able to equip and digitize the mutual fund distributors. They are the ones who in turn go and acquire the end customers. Right? So we have a lot of initiatives in place, right from enabling better research prospects for the MFDs to be able for them to offer better research services to their end customers. And the moment they are extremely well digitized, they are also in a position to handle a much larger number of customers too. Right? So our end customer base grows via the mutual fund distributors. So right now, at least, that's a cascading effect for us, and we don't specifically focus on growing the end customers as on today. Right. So it's all going to be centered around mutual fund distributors.
So what's that customer growth projection number likely to be going forward?
So say how you can look at this is we have about 165,000 customers and about 19,000 mutual fund distributors. So ratio wise, it's about say an average 8 to 9 customers per MFD. And if you look at it, active mutual fund distributor and client ratio, that's more like somewhere about 25 customers per MFD. Right. So that number, say assuming it goes to like a 40 or 50 over a period of time, when we hit 50,000 mutual fund distributors, we should technically have at least 10 to 12 lakh investing customers.
Right. That's and those are well laid out projections, no doubt. But just moving forward, Vishranth, I know for a fact that there's been so much talk about, and your model pivoting from a DIY model to actually a more advisor-led or advisor-backed up approach to investing itself. What does this do to your assets under management? I think around 7,250 to 7,500 crore rupee is where your AUM is at the moment. Where do you see that number going up from here, and what are projections like on the AUM front?
So here, Jude, so for the assisted model, which is what currently AssetPlus offers, right, by MFDs, the difference in the customer portfolios per average customer portfolio is quite different. Because, right, say if you look at a do-it-yourself platform, a customer is transacting with a tech platform, right? So the kind of credibility the platform might have, the kind of conviction the customer has to trust a large part of their wallet share towards a platform is relatively lower. But once you have like a human expert who you are in regular touch with, they engage with you, they give you good advice, and you see your portfolio grow, the average customer portfolio on platforms like us are much larger than average customer portfolios on a DIY platform. So I think about 160,000 customers and close to 7,500 crores of AUM is somewhere about 4.5 to 5 lakh portfolio size per investing customer. Right. So we hope that with the number of increasing MFDs, which will increase the number of customers, we can potentially target a 50-60,000 crore of assets under management in mutual funds over the next 5-6 years or so.
Absolutely.
But also for given the DNA of the company, we generally do not take very hard finance and business targets because we are long-term thinking in nature. So we are hoping to play this game for 15-20 years. And as long as we do right by the customer, if 50,000 is not possible in 4-5 years, maybe a couple of years down the line. But the overall vision for us is how can we potentially help 10 crore households in India by having their financial freedom secured by MFDs. Right. That's a larger vision that we would like to focus on.
Right. Let's talk money again for a bit. 175 crore rupees, like we mentioned, was that latest round of funding. All investors on board? Are there anyone looking for exits? What's the investor front looking like and shaping up for you at AssetPlus?
So on that front, we've been quite fortunate to have had investors even prior to the round who understand the business extremely well, and more importantly, they are also quite long-term vision in nature. So that's quite aligned with how both of us founders have been thinking through. So Mr. Nitin Kamath has been a very generous supporter of our business from 2022 April. So this is the fourth round we have raised since then, and he has participated in all the rounds. It's considered to be like a very perpetual capital type. So don't have to do something for the short-term focus. So fortunately, then 8 Roads, which is backed by Fidelity, has also come on board. And for this round, what we did observe was wealth management as a whole in India is quite hot. So, and within wealth management, there is a significant shift of interest from do-it-yourself platforms to assisted platforms like what we are. And a couple of larger players who have, one has listed, and I think one of the others are fairly large. So I think there's a lot of context that has been said that assisted wealth has a huge room to grow, and DIY platforms might have their own limits of sorts. So thankfully the space was very hot, fair amount of investor interest also for this round. But we really like Nexus because we have been in touch with them for quite some time. They understand the model very deeply. And for us as an organization, we are not too much into launching a large suite of products, trying to cross-sell everything. So we prefer doing things step by step and taking it at a pace where we are more focused on saturation rather than just having to inform that we have a whole bunch of other things. Right. So I think a lot of those DNA aligned very well with Nexus Venture Partners and the partners there we spoke. So they have come on board. Right now the major investors are these three, and we also had Mr. Bhupinder Singh of the Incred Group who had supported us earlier. So he's still part of the cap table. So I think these are the 3-4 investors we rely on, and no particular exit access planned as well.
Absolutely. So, well, from one funding story to another, not long ago, Bengaluru-based chip startup SenSemi Technologies also announced a seed round of 25 crore rupees led by Piper Serica with participation from other institutional and angel investors. The company has been of particular interest given the development of its integrated edge AI chip targeting industrial, automotive, and medical applications. So to speak to us about where the money is going and how the startup plans on growing, I am now joined by its CEO, Vijay Muktamat. Vijay, good to have you with us here on the Bulletin. My first question to you. You've raised 25 crore rupees at the seed stage. How long does this capital realistically give you in terms of a runway? And what are the clear milestones that investors expect you to hit before your next round?
All right. Hello, Jude. I think SenSemi has raised 25 crores, which is close to around $2.7 million. And this is a very significant aspect in semiconductor ecosystem, not only in SenSemi, but also as a semiconductor fabless ecosystem. Why? Because, earlier this used to be on a lower round of 1 million or less than that as part of seed. But now, since, in terms of semiconductors, which requires slightly on a higher capital, this is a, significant milestone in bringing the chips from India. From SenSemi perspective, this is going to be, an important aspect where this money will be utilized to, ramp up the team. The experience matters quite a lot in semiconductors. That's something which we are looking at. And also, semiconductors typically requires around a couple of test chips to be done. And SenSemi is on its right target in achieving first test chip very close to in next 1 month or so. And then post that, we would have another test chip, which is more towards a product oriented. aspects where the certifications and other things will take into place, and then we will get into the production phase probably by Q1 of next year. But having said that, the investors are backing us quite a lot in the area of the business where we are heavily concentrating upon. So the one of the important parameter is to have the the test chip in our customers' hands to test it out, which is our motive as well in Q3 of this year.
Right, Vijay. Now, what you at SenSemi are essentially doing is building an integrated edge AI chip targeting industrial, automotive, and medical applications. So when can customers begin testing your chip, and how far are you from generating commercial revenues?
Good question, Jude. So primarily, first test chip, as I said, it's going to be in a month's time. So it should be back from the fab. As you know, we are working with outside India fabs, typically TSMC, where we would get the first test chip back probably by May end, and we will undergo a lot of regression testing for a couple of months. So the first test chip, which we would give into our customer hands probably by July, August timeframe, where the customers would be testing out, their applications as well. Now, on the commercial aspects, of course, it's a long gestation period in terms of how semiconductor industry goes, especially in fabless. We are expecting our first revenue to hit our account probably by Q2 of next year.
Vijay, let me quickly bring you in on those US-India trade relations. In fact, the evolving nature of that trade engagement is positioning India as a trusted semiconductor partner. So for a fabless startup like SenSemi, does this realistically improve access to advanced fabs, or are export control restrictions still a bottleneck for Indian chip designers?
I would say, it's a mixed reaction. We still have to wait and watch how this trade deal impact, especially fabless semiconductor. But one primary aspect where I feel is that if we are building the cutting edge technologies, especially in the AI compute, primarily, companies like NVIDIA's are, envisioning itself. Yes, the advanced fab access may be made easy for companies like ours, especially in India. But having said that, if I have to talk, especially from SenSemi's perspective, since we are very analog RF concentric, I think the advanced fabs may not be that relevant, because our whole architecture, what we are developing, is slightly different, where we require mature node technologies where the access would help in. But one other important point which also helps in the trust factor, right? So this is one point which you mentioned, which is very, very necessity in today's world. And then India would be the best trusted partner with the US to take it forward in semiconductor chips to be brought out to the world.
I'm sure you're also aware that global players in the US, Europe, and Taiwan, for that matter, are already shipping edge AI chips. So why should an OEM choose SenSemi over established international competitors? Is your edge cost, power efficiency, supply security, or is it something else?
All right. A couple of things where the world is heading, like, primarily towards the digital compute, where the advanced nodes and the cost also skyrockets as well, right? Primarily if we have to bring in that particular technology towards the edge devices. So where SenSemi is slightly different is, it's trade-off between the power efficiency, where we feel that the technology, what we have, have got it, is definitely going to be at least 1/10 the power to what the world is looking like. But having said that, power is one thing, but of course the performance is another aspect where the trade-off has to be looked in. And we are optimally at a performance optimized with energy efficiency, which is the requirement, especially for the edge devices, because edge devices do require where it runs on the power, where it runs on the battery, I beg your pardon, and then some of them do work on the wall power, right? So you need to have a optimized solution for both the aspects to be brought into edge devices. And we feel that, we have an edge in terms of energy efficiency as well as optimized power required, what is now need of the hour for the future technologies in edge devices.
Well, before I end, let me ask you, the union budget has also reiterated strong support for semiconductor design and ecosystem development, including incentives for chip startups. So from your vantage point as a DLI-approved company, is this support translating into faster execution on the ground, easier access to capital, talent, and fabrication partnerships, or are bottlenecks still slowing things down?
I would say, Jude, DLI is going to be benefited as part of this new union budget, which is just recently announced. But having said that, India has taken those steps even in DLI 1.0 as well, right? So we have taken the step where nobody has ever thought in India that semiconductor would come back to its life apart from the MNCs, where startups can collaborate and startups can build the innovation. And now, having said that, with this budget announcement which has come in, which will also help not only on the fabless but also on the fab side of things. So we started our journey as in India as a fabless, and then bringing the OSATs into consideration. But now things are going beyond OSATs as well. So we are looking at fab, which is coming up quite aggressively in next 3 to 4 years. And then what's the raw material required for that is also a big concern as well going forward in next 10 years vision. And this budget has stepped into that aspect as well. Now coming on to DLI 2.0, which could be announced pretty soon, I think now this time it will be very focused in what is required. And as you know, the Union Minister for IT has already mentioned that, there are specific areas of at least 2 to 3 compute, RF, to name a few, are going to be very aggressively looked into DLI 2.0, which is the way to go forward as far as design is concerned. Now, one other aspect which also helps in fabless ecosystem from the budget is also, the accessibility to IPs as well, where that really helps to, expedite the SoCs or the chips to be manufactured and owned by Indian companies.
Well, we'll leave it at that then. Vijay, thanks so much for joining us and breaking down some of those insights. We hope to talk to you again real soon. Moving on to news from the courts next, the Kerala High Court has issued a notice to the producers of the controversial film, The Kerala Story 2. A single-member bench of the court has asked the makers of the film to answer on alleged violations of the Cinematograph Act and for the use of the word Kerala in the film's title. Now, the latest court directive comes after a petition submitted that the film was awarded clearance by the Central Censor Board despite violations to the Act. The petition also said the film was looking to stoke the flames of communal disharmony in this state. Now, the sequel to the equally controversial The Kerala Story has reignited political debate yet again, as it is all set for a February 27th release. In fact, Kerala Chief Minister Pinarayi Vijayan has slammed the sequel, accusing the film of spreading hate. He has flagged what he calls a communal agenda and said that Kerala will reject fabricated narratives. The Chief Minister also alleged that the film attempts to demonize the state's secular fabric and called for unity against the discord. The controversy around the film is now once again at the center of a political discourse, even as the sequel has stirred a hornet's nest. The court has now directed respondents to the petition to submit their replies by the 24th of February. Shifting focus to Karnataka next, the state is making a pitch for a role as a national leader in responsible artificial intelligence. At least that's the word coming in from senior ministers who attended the AI Impact Summit in New Delhi, who said that Karnataka will be focusing heavily on AI skill development, ethical use in governance, and global tech partnerships. At the India AI Summit, Karnataka's IT Minister Priyank Kharge, as well as the state's Skill Development Minister Sharan Prakash Patil, highlighted Bengaluru's strong talent pool while underlining the government's plan to train 5 lakh graduates annually in AI-related fields by setting up multiple centers of excellence. In fact, let's listen to what Priyanka Karge had to say about the use of responsible AI.
So there is a lot of disruption, and we have been meeting a lot of global leaders and also innovators over here to see how they can work with the government of Karnataka, help us with more responsible use of AI, and more importantly, how can we ensure that the right skill sets are available, right incubators are built, and right centers of excellence foster startups, and of course for e-governance. So yeah, so like I said, we are a little ahead of curve, and it's exciting to see so many people.
Well, with that, it's a wrap on this Bulletin of South Central. Thanks so much for watching. We'll see you next week with more news and action from South India as we keep bringing you the latest from the region. For the moment, it's goodbye from us.